You may be wondering, as a student, do you even have to pay taxes? Well, the answer is, it depends. And the reason is because it depends on your personal situation and your tax residency status in Canada. This is a criteria that determines how much tax you have to pay and what deductions and tax credits you are eligible for and what you can claim. There are different types of tax residency status in Canada, such as resident, such as non-resident, such as deemed resident, and such as deemed non-resident. And if you are not sure what these means, don't worry about it. I will cover this in much more detail in the upcoming lessons. For international students, there is also another rule you need to be aware of, and it is called the 183-day rule, which essentially means that if you stay in Canada for more than half a year, you are deemed a resident for tax purposes. That means you have to pay tax on your worldwide income, just like a regular resident. However, you may be able to avoid double taxation if your home country has a tax treaty with Canada, so definitely look into that if you fall into this bucket. Now, how do you know if you actually have to pay taxes or not? Well, this will depend on how much income you make and from what sources. For example, you may have income from employment, from scholarships, from investments, from business, from rental, and from other foreign sources. If you have any of these types of income, I highly recommend filing your taxes. But what if you don't have any income or your income is very low? Do you still have to pay or file your taxes? Well, yes, you should still file your taxes. And the reason is because filing your tax return can give you access to various tax credits, various benefits, and a tax refund that can either save you money or give you your money back from the government. For example, you can also claim things like the GST HST credit. You can claim the Canada Workers Benefit. You can claim the tuition tax credit or even the climate action incentive. And you can only claim these incentives and deductions if you file your taxes. And these are just some of the benefits you may be eligible for by filing a tax return. And in fact, there may be even more tax benefits that I haven't listed, and this will depend on your province or your territory. It will depend on your age, your family situation, and other factors. So don't miss out on these opportunities. This is your money. Claim what's yours. But make sure you file your taxes on time and pay if you owe taxes. The deadline for filing taxes is April 30th of each year, unless it falls on a weekend or a public holiday. Then it is extended to the next business day. Now, if you are self-employed, the deadline for filing taxes is June 15th. But if you owe taxes as a self-employed individual, you still have to pay your taxes by April 30th. And if you miss the deadline, you may face interest and penalties, and trust me, these add up very, very quickly. I'm about to show you why. For example, let's say you owe $5,000 on your taxes and you don't get around to filing until October of that very year. That means you are 6 months late. By the time you add up the interest and penalties, you will end up owing an extra $800 roughly on top of the $5,000 you already owe. That's a total of $5,800. So how does the math work? So let's break that down, right? You owe $5,000 in taxes. The penalty is $550, and that's calculated by taking a 5% base penalty on the $5,000, which is $250, plus 1% on what you owe for every single month you are behind. In this case, you are already 6 months behind. So if you add all that up, the $250 plus the $50 for each month you're late, that's a total of $550. Don't forget, there's also interest on top of this. So you owe $5,000 originally, and the interest rate is roughly around 10%. If we annualize that, that's roughly $500. But because you're only 6 months behind, and again, I use the word only very loosely, because you are 6 months behind on taxes, that interest will get prorated to half a year. So in this case, if we take $500 for the full year, it's $250 for half the year. If we add up the $550, the $250, that means the total you owe, the CRA, assuming you file by October, is $5,800. If you file by November, December, that amount only goes up from there. That is a lot of money to waste, don't you think? Especially if you're a student, that $800 I'm sure is better off in your pocket than the government. So don't let this happen to you. File your taxes on time and pay what you owe. I can't stress that enough. And if you can't pay the full amount, then contact the CRA and arrange for a payment plan. They may be willing to waive off some of the penalties and interest if you have a valid reason for being late. Lesson number 2, how to file your taxes. Now, filing a tax return may seem like a daunting task, but it doesn't have to be. There are different options available to you that suit your preferences and your needs. And in this lesson, I will cover 3 of those options. I'm going to talk to you about paper filing using a tax software or even using a mobile app. The first option we're going to talk about is paper filing. This means that you can complete and file your taxes manually using a paper return. You can get an income tax package for the current year online. You can download it and print it off. You can order one by calling the CRA through your phone, or you can get one from the CRA website. Now, the package that you'll get contains all the forms, the schedules, and will guide you on how to manually fill out this paper tax return. Once you have completed your tax return, you simply mail it to the appropriate tax center. And if you're using this approach, the processing time for paper filing is roughly 8 weeks. The second option is using tax software. This means that you can use CRA-approved tax software to calculate and file your taxes electronically. And you can choose from the many options available of tax software, such as online, downloaded, or installed on your device. Some of them are free, some of them are paid, and some of them are tailored for your specific situation. And you can find a list of CRA-approved tax software on the CRA website. Once you have completed your tax return electronically using the tax software, you can file something called NetFile. NetFile is a secure service that allows you to send your tax return electronically over the internet to the CRA. And the processing time, if you're using tax software, is typically around 2 weeks. The third option available to you is using a mobile app. That means that you can use your mobile app to file your taxes either using your phone or a tablet. And you can choose once again from CRA-approved mobile apps that are designed to make tax filing very easy, very convenient. And some of them even allow you to scan your tax slips, answer a few simple questions, and file your tax return within minutes. It's, again, very easy and super convenient if you're using your phone or tablet. And you can find a list of CRA-approved mobile apps on the CRA website. Once you have completed your return using the mobile app, just like the tax software, you can submit it online to the CRA using NetFile. And the processing time is very similar to using tax software. It is typically around 2 weeks. Now on this list, you can see the various options that are CRA approved and will allow you to file through various online platforms. You can see some are online, some are available on your desktop, some are available on a mobile app. You can choose whatever option works for you depending on your comfort level, your budget, and your time. But no matter what option you choose, I highly recommend you file your taxes on time and pay what you owe. And finally, out of those 3 options in terms of paper filing, tax software, or using a mobile app, I'd rather you use options 2 or 3. Filing by paper is very cumbersome, very manual, and it is prone to error. So I wouldn't use this option unless it's the only option you have. So I highly recommend using certified tax software or using certified tax apps available on your phone or tablet. Lesson number 3, tax residency. In this lesson, I'm going to talk to you about your tax residency and what that means if you live in Canada. Now, this is an important topic for anyone that either lives in Canada or plans to move here, because your tax residency status will determine how much tax you have to pay and on what income. First, let me explain what tax residency means and why it's important. Tax residency is not the same as your citizenship or immigration status. It is based on your residential ties to Canada and the length and purpose of your stay in Canada or abroad. The Canada Revenue Agency, or the CRA, is the government agency that administers the tax system, and they will decide on your tax residency status. There are 4 main types of tax residency status. First is factual residence. Second, deemed residence. Third, non-residence. And last, deemed non-residence. And let me briefly explain what each one of them means and their tax implications. Factual residents or residents are individuals who have established significant residential ties with Canada, such as your home, a spouse, dependents, or personal property in Canada. If you are in this situation, you are subject to Canadian income tax on your worldwide income from all your sources, regardless of where you live or where you work. Next up are deemed residents. Deemed residents are individuals who have not established significant ties to Canada, but you have been in Canada for 183 days or more in a calendar year. You are also subject to Canadian income tax based on your worldwide income from all your sources. But you can also claim tax deductions and credits similar to that of factual residents. Deemed non-residents. These are individuals who have established ties in a country that Canada has a tax treaty with and are considered residents of that country. but they also maintain significant ties to Canada as well. They are treated as the same as non-residents for tax purposes. The same rules apply to deemed non-residents as they do for non-residents. So what does this really mean? Let me explain with an example. Let's say you've come to Canada to study and you've only been here for one semester, and let's say that semester was about 120 days. And let's say the rest of the time you spent back home, wherever in the world that might be. In this case, you only have to report income that you made in Canada while you were here on your tax return. As you can see, determining the right tax residency is super important because it will have a big impact on your tax obligations and benefits. Therefore, it is important to know your tax residency status and report your income correctly to the CRA. If you are not sure about your tax residency status, you can contact the CRA for their opinion. You can also connect with a tax professional or visit the CRA website for more information. Lesson number 4, identification number. In this lesson, I'm going to talk to you about what an ID number in Canada is for tax purposes. This is an important topic for anyone who lives in Canada or plans to move to Canada because your ID number will ultimately determine how you report your income and how much tax you have to pay. First, let me explain what an ID number is. An ID number is a unique identifier that the Canadian government uses to track various financial activities and administers various programs and services to you. Now, there are different types of ID numbers for different purposes, but the most common ones you'll see is the social insurance number or SIN number and the individual tax number or ITN for short. Now, as a student, if you are not sure about what you need or the process to get one of these ID numbers, I highly recommend reaching out to your International Student Center at your school for more guidance. And I'm sure they will be happy to help you to figure out what you need and how to help you. Let's talk about the SIN number. The SIN number is a 9-digit number that is issued to Canadian citizens, permanent residents, and temporary residents who are authorized to work in Canada. And the SIN is used for various purposes such as filing your income tax return, applying for government benefits and credits such as the Canada Child Benefit or the GST/HST tax credit. You can also use it to apply for a loan or opening up a bank account. It also comes in very handy if you're contributing to the Canada Pension Plan or the Employment Insurance Program. The ITN, on the other hand, is also a 9-digit number, and it is issued to non-resident individuals who need an ID number for tax purposes. The ITN is used for situations such as filing an income tax return in Canada, applying for a waiver or reduction of withholding payments from Canada. It's also used for disposing of taxable Canadian property, and you can also use it to filing an underused housing tax return. Now let's talk about how you can actually obtain one of these very handy and important ID numbers. First, the SIN number. You can apply for a SIN at any Service Canada office. What you'll need to provide is your proof of identity and your status in Canada, such as a passport or a birth certificate or a study or work permit. And you can find more information on how to apply for a SIN on the Service Canada website. You can apply for an ITN by filling out a form and sending it to the Canada Revenue Agency. You will need to provide supporting documents to verify your identity and your reason for applying. You can find out more information on how to apply for an ITN number on the CRA website. As you can clearly see, having an ID number is very important, and it is an essential piece of information that you need to have if you live in Canada or have financial dealings in Canada. It helps you report your income and pay taxes correctly, as well as access various government benefits and services. Therefore, it is so critical and important to know your ID number and keep it in a safe and confidential place. You don't want to lose your ID number, and you don't want everyone to know your ID number unless they absolutely need it. And if you are still not sure how to get an ID number, whether you need a SIN number, whether you need an ITN number, I would highly recommend once again reaching out to the International Student Center at your school, and they would be more than happy to guide you. Lesson number 5, important tax documents. In this lesson, I'm going to talk to you about some important tax documents that you need during tax time. I'm going to talk to you about a T4A slip, a T4 slip, a T3 slip, T5 slips, student loan interest receipts, and the Climate Action Incentive payment. First, let me explain to you what a T4 slip is. It is essentially a slip that shows you the income you earned when you worked for an employer. It will show you the amount of income tax you paid, the contributions to the Canada Pension Plan, the CPP, and how much you paid into employment insurance or EI. And all these three items are essentially deducted from your gross pay when you get your paycheck. So in a nutshell, a T4 slip is essentially a summary of what you saw on your paycheck throughout the year. And be sure to look out around February of each year for this T4 slip in your email or in the mail. A T4A slip, on the other hand, shows you the other types of incomes you may have received, such as a scholarship, bursaries, research grants, or self-employed commissions. You will also receive these slips from your employer, payer, or administrator by the end of February of each year. You will need to report the amounts shown on these slips, both the T4 and the T4A, on your tax return. Now, why are these slips so important? Well, these documents help you report your income using a tax software, using a mobile app, and they will also help you claim deductions and tax credits, and will ultimately help reduce your income tax payable based on how and what you claim on your tax return. Next, let me explain what a T3 and a T5 slip are. First, a T3 slip, which shows you the income you earned from investments in a trust, such as a mutual fund, an ETF, or a segregated fund. A T5 slip, on the other hand, shows you the income you earned from investments in a corporation, such as dividends or interest. You'll receive both the T3 and T5 from your financial institution or investment manager by the end of March of each year. You also need to report the amounts shown on these slips, just like the T4, just like the T4A slip, on your tax return every time you file. Another very important document you need as a student when you're filing your taxes is the student loan interest receipt. This essentially shows you the amount of interest you paid on your student loans, whether it was provincially provided or federally provided, and how much interest you paid on that loan during the calendar year. Now, based on the amount of interest you have paid on that loan, you can claim a non-refundable tax credit for that amount, which will ultimately help lower the amount of taxes you have to pay to the government. And how do you get this receipt? Well, you can get it from the National Student Loan Service Center or your provincial or student loan provider. Finally, let me explain what the Climate Action Incentive is and how you can get this payment. Essentially, this is a tax-free payment you receive if you live in Alberta, Saskatchewan, Manitoba, or Ontario. These provinces have a federal carbon pollution pricing system that increases the cost of fossil fuels and other sources of greenhouse gas emissions. Now, what the Climate Action Incentive payment does is essentially offset the increased costs you have to pay for fossil fuels. And essentially, it encourages you to take action to reduce your carbon footprint. You can claim this payment when you file your taxes each year. Now, the amount you receive on the Climate Action Incentive payment will depend on your province, your family size, and your eligibility for the supplement of residence, whether you live in a small or a rural community. As you can see, these tax documents are very important for students as they can affect how much income you have to pay, what expenses you can claim, and ultimately if you are going to get a tax refund or you have to pay taxes back to the government. So it's very important you keep these tax documents, everything I've listed in these various lessons, in a safe place and review them carefully, because if there's a mistake, you don't want to overpay your taxes. So if you find an error, definitely contact the provider of that tax document. And if you need any help with your taxes, you can use online software that we talked about in this module. You can consult a tax professional or visit the Canada Revenue Agency website for more information.